Good morning, student. I am going to continue the chapter journal entries. This is my lecture number 17A. In my previous video, I have explained the journal entry related to outstanding expenses, prepaid expenses, opening entry and compound entry, bad debt recovered, etc. Today I will learn you recording of banking transactions. Recording of banking transactions. So first transaction, suppose when cash is deposited into the bank, then journal entry will be bank account DR to cash account, being cash deposited into bank. Narration will be being cash deposited into bank. In this case, bank is receiver because bank is personal account. Bank is an institution. So when we deposit cash into bank is receiver, and according to rule of real account, cash is going, so it will be credit. Now second point, when cash is withdrawn from the bank. When cash is withdrawn from the bank, then journal entry will be just opposite. It will be cash account DR to bank account, because cash is coming in my business and bank is giver, so cash account will be debit and to bank account. Third journal entry, when check deposited into bank which is received from customer same day. check received, suppose today, from a customer, and only today deposit into bank, then journal entry will be bank account dr to customer's personal account, means customer name, customer's account, because bank is receiver and customer is giver, and check deposited in my account, so I will write bank account dr to customer's personal account. But check received from customer and not deposited same day. Suppose today I have received a check from customer, but due to some problem I could not deposit into bank. In this case, journal entry will be check is coming in my business, so check in hand account dr, check in hand account dr to customer's account, because customers is giver. Now fifth point is, when I deposit this check, means above check deposited into bank, then journal entry will be bank account dr to check in hand account, because check in hand account, check is going and bank is receiver, so journal entry will be check bank account dr to check in hand account. Now some other journal entry related to bank is, when a customer directly deposit the amount in our bank account. Sometimes customer direct deposit the amount in our bank account. So in this case, journal entry will be bank account dr to customer's account, customer's personal account, means suppose customer Ram deposited directly rupees 1,000 in our bank account, then journal entry will be bank account dr to Ram's account 1,000 and 1,000. Now when a check previously deposited into the bank is dishonored. Dishonored means to bonds कर जाना. When a check deposited but now it has bounce or dishonor. In this case, customer's account will be debit to bank account because cash is deducting from my bank account. So it will be credit. Suppose cash is going. When customer deposit in our bank, cash is coming. When deposited check dishonored or bounced due to some reason, then suppose cash is going, then customer's account will be debit and to bank account. Next point is when payment is made by issue of a check, then journal entry will be personal account DR, personal account DR to bank account. Suppose check paid to Ram, then journal entry will be Ram's account DR to bank account because cash is going from bank. So bank account will be credit. When expenses are paid by check, then journal entry will be expenses account DR to bank account. Suppose salary paid by issuing a check, then journal entry will be salary account DR to bank account. When interest is allowed by bank, then journal entry will be bank account DR to interest received account. Because amount increase in bank, so it will be debit, and interest received will be our income, so it will be credit. When bank charges some some amount for the service rendered. Then journal entry will be bank charge account dr, bank charge account dr to bank account, because bank charge is our expenses, so it will be debit, and cash amount is deducting from bank, so it will be credit. On the basis of this transaction, student, bank account will be debited when amount increase in our bank account. In all the cases, when amount increase in our bank account, then bank account will be debit. But due to some reasons, amount deduct from my bank account, then bank account will be credited. So this will be the rule also. Now some other point. Student, in my previous video, due to short time of video, some items are left. So I also want to explain in this video. First is depreciation. What is depreciation? I have explained in my previous video, but once again more. Depreciation is the permanent and continuing decrease in the value of assets, value of fixed assets, due to wear and tear and passage of time. It is a business expenses. It is a business expenses. Though it is not paid in cash, depreciation is a nominal account since it represents a loss and hence is debited. Asset account will be credited as its value is reduced due to depreciation. Then journal entry will be depreciation account dr to assets account, because depreciation is our loss and decrease in the value of assets. When any asset decrease, it will be credit, and when any asset increase, it will be debit. Suppose I purchase furniture, then furniture will come in our business and it will increase, so it will be debit. But when we sold furniture, then it will decrease, so it will be credit. Same thing is here. When depreciation charge, then value of asset decrease, so it will be credit. Then in this case, depreciation is our expenses and losses, but cash is not going, so I will write depreciation account DR to assets account. Now next thing is interest on capital. In order to ascertain the true efficiency of the business, it is a normal practice to charge business with interest on proprietor's capital. Profits left after charging the amount of such interest are the real profit earned by the business. Such interest is a loss from the point of view of the business, and therefore, according to the rule of nominal account, interest account is debited in the journal entry. The amount of such interest is a gain from the point of view of the proprietors, because proprietors invest capital in business and proprietors take interest on capital from the business. So it will be proprietors gain, but interest on capital will be expenses for the business. So I am doing the journal entry in the books of business. So in the point of business, his capital account will be credited. Then journal entry will be interest on capital account DR to capital account. Same thing is drawing. Drawing means when the owner of business withdrew some cash from business, it is called drawing. For personal use, for domestic use, I have explained about drawing. So in this case, journal entry will be drawing account DR to cash account. Cash is going and drawing is made by owner, proprietor. When capital invest in business by proprietor, that means started business with cash, then journal entry will be cash account DR to capital account. But drawing is opposite of invested capital, so drawing account DR to cash account. Now interest on drawing. Interest on drawing. Interest on drawing, journal entry will be drawing account DR to interest on drawing account. because interest on drawing will be income for business, because the amount which is withdrawn by proprietor should give the interest to business for the amount which was withdrawn by proprietor. So it will be, journal entry will be drawing account DR to interest on drawing account. Now I will meet with some new topic of journal entry in next video. Thank you very much.